Chakri Lokapriya from TCG also joins us right now on the show. Chakri, good having you. What do you think the equity markets are pricing in? 25, more than 25? And does any of the actions, either the commentary or the action, augur positively? Because I tell you right now, the equity markets are watching for a lot more. Maybe some moves from the FPI side, maybe some action from the Reserve Bank of India. What can the RBI do?
Well, hello. I think clearly the market is expecting clearly 25 or more. And that wouldn't really move the needle in terms of the market's direction upwards. I think it's more than RBI. What is needed is clarity on the policy front on how FPI is going to be taxed. Will they remove the surcharge? What will they do to the auto industry, GST tax rates? It's more policy, I think, rather than what the RBI can do, because while easing the RBI easing rates is clearly important, but what is more important is to reinvigorate growth. The climate of growth is not there right now, and which needs to be addressed.
Chakri, just very quickly, 25 basis points, if that's the pronouncement, equity markets, do they stay steady or do they come off a bit?
25 bips, I think the market stays steady because it's already fallen a lot. A little bit more also, if they cut more than 25 bips, then maybe the markets can trade a bit higher, but it's a trade, but not sustainable really.
With regards to, if at all there is any commentary with liquidity management and transmission, what do you think is the reaction of, most of these NBFCs and banks going to be like?
Yeah, NBFCs and banks have corrected quite a bit, and so any commentary on the liquidity will clearly help both the NBFCs and banks, and liquidity is anyway in a fairly decent surplus. So I think, and talk about growth by the RBI governor will clearly help the market, because the RBI has moved its stance towards, or rather included growth as a part of its stance and not just inflation targeting.
Chakri Lokapriya, your initial thoughts, we haven't quite gotten to you. What did you make of whatever little you've heard thus far? The equity markets or the bond markets for that matter are not reacting too much, even though in a manner of speaking there's a bit of a front loading that the MPC has done.
Yes, my initial thoughts are, the RBI has correctly focused on growth, and because inflation is anyway low and it's less important at this point in the cycle, and by doing a 35 basis points, I think he has indicated, and also cutting the risk weights on NBFCs, because the consumer, the auto, and also the banks are also tightening up their screws in lending to NBFCs. So against that backdrop, I think what he has done, both by the 35 basis point is good, and also reducing risk weightage to support the consumer is also good. So the RBI has done its bit. So now it's up to the government to do the policy bit.
Chakri Lokapriya, if he's still with us, just a quick, Chakri, your initial thoughts. You heard the long press conference as well. High expectations on growth in Q4, a 35 basis points cut now, not enough clarity about what will happen in the next policy. How do you think equity markets take it?
I think the RBI governor was very pragmatic in recognizing that there is a slowdown, both urban and rural. And he's taken steps, I think, very pragmatic ones with a focus on whether risk weightages or even a 35 basis point cut, which seems unconventional but very pragmatic. He's indicated that he is data dependent and that the growth slowdown is cyclical in nature, which we agree with. So I think we have a very responsive RBI, which is with eye on its ball. I think it's done its bit, and hopefully things cyclically improve towards the end of this year.
All right, Chakri, it was great getting your thoughts. Thank you so very much for taking out the time on the special coverage of the RBI monetary policy.